Vanguard are the world's fastest growing asset managers, and constructing a portfolio of Vanguard Funds is one of the best ways to start as a beginner investor. In fact, I'm so impressed with Vanguard Funds, I invest a large portion of my own wealth in them, and I believe that they will also serve you well on your investment journey.
In this video, we are going to look at constructing a portfolio wholly consisting of Vanguard funds, which is perfect for the beginner and the experienced alike. Let's check it out.
Welcome to Money Unshackled, the investment channel that sets you and your finances free. I'm Andy, this is Ben, and if you like what we say, hit the like button and click subscribe. Let's get into it.
So, who is Vanguard? Vanguard is the second largest asset manager in the world and has broken their own record as the fastest growing asset manager for the 6th year in a row.
Their assets managed have been growing by more than $1 billion per day, and according to the New York Times, they're growing faster than everybody else combined. They have been achieving this by driving down the fees they charge to investors and offering no-nonsense index funds.
Put it this way, if you're shopping online, you can be confident that if you go to Amazon, you will get the cheapest prices on the market, or at least very competitive prices, meaning you don't have to search elsewhere, which as a shopper is exactly what you want. For an asset manager, we trust Vanguard even more to offer those rock bottom fees that we love.
This seems like a good point to tell you that if you don't want the hassle or can't be bothered to manage your own portfolio, then you should check out our other video on the Vanguard Lifestrategy funds. We'll put in a link in the description below. This is a ready-made portfolio of Vanguard funds. But for those who want to learn and get involved, let's take a look at a theoretical portfolio that we will now construct using funds from the London Stock Exchange.
FTSE 100 ETF. As a UK-based investor, it makes sense to have a large exposure to the main UK index, which is the FTSE 100. The ongoing charges figure, also known as the OCF, is very low at only 0.09%. As you can see, performance has been very good and has tracked the FTSE 100 very closely.
UK stocks pay very juicy dividends, and at the close on the 31st of July 2018, the annual yield is 3.91%, and they pay this out quarterly. Let's say we have this ETF make up a 30% share of our portfolio.
S&P 500 ETF. Next, we want the world's largest economy to form part of our portfolio. We can achieve this by choosing an S&P 500 ETF. The Vanguard one only charges 0.07%. By the way, the S&P 500 is largely regarded as the benchmark of the US's economy's performance as a whole, and is made up of the largest US companies.
Here you can see the performance against the index. As we would expect, it mirrors the index almost perfectly, and performance has been exceptional. Let's say we want this ETF to make up 30% of our portfolio.
FTSE Developed Europe ex-UK ETF. Next, we want some exposure to Europe, and this fund looks good. It has a low OCF of only 0.12% and gives us exposure to 444 stocks across Europe.
This is a good fund for geographical diversification. As you can see here, you'll get exposure to Germany, France, Switzerland, and many more. Also, as you can see here, we don't have a full 5 years history, as the exception date was 2014, but you can see how well the index performed to gauge how well the fund would have done.
Europe is a key part of the global economy, so let's make this fund 20% of our portfolio.
FTSE Emerging Markets ETF. Depending on your attitude to risk, you may want exposure to the emerging markets. The Vanguard fund costs just 0.25% and gives you exposure to over 1,000 stocks across the world, particularly China.
As you can see here, performance has been a mixed bag, but over the longer term, this fund is likely to perform very well. But of course, as it's an emerging markets fund, the risk is higher. For this reason, let's allocate just 10% of our portfolio to this fund.
Global Bond Index Fund. This is not something that we would invest in ourselves because we are not a fan of the lower expected returns that you get from bonds and gilts, but some of you may be interested in this, hence why we put it in the video. Let's say this makes up 10% of the remaining portfolio. This fund is not an ETF like the others, but for most investors this makes no difference. This particular fund invests in around 10,000 bonds and has an OCF of 0.15%.
Performance is not as good as a fund which invests in stocks, but this is expected due to the lower risk nature of a bonds investment. I'd also expect lower volatility with a bond fund. This can be seen here in the steady growth.
The final portfolio. Here is what our portfolio looks like with the weighted OCF. As you can see, the OCF is at a rock bottom cost. These funds should prove to be a good foundation to build your own portfolio. Good luck.
Question of the day: what Vanguard funds are you invested in and why? Leave your answers in the comments section.
Thanks for watching. On this channel we talk about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is Money Unshackled. See you next time.